Hi guys, I'm Kalila Reynolds and we're back with another episode of Money Moves brought to you in partnership with Exim Bank's Business Advisory Service. Today we're talking about working capital and receivables financing. How can Exim help with that? And we're joined by Alan Thomas. He is the Trade Origination Manager at Exim Bank. Welcome back, Alan.
Okay, thank you.
Okay, so first of all, what is working capital? Explain what that is.
Working capital is the cash that you need to carry out the day-to-day function in the business.
And sometimes when you're in business, you might have a shortage.
Yes, that is something that you'll find in most small businesses.
Especially when you have what they call receivables, right?
Yes, because what happens with the receivables is that sometimes you find that persons are supposed to pay you 30 days down the road, 60 days down the road, and they don't pay you until 120 days. And that in itself creates a problem for the business.
It's a cash flow issue.
Yes.
So Exim has a solution for that.
Yes. What we do at Exim Bank is that we allow businesses to leverage the receivables that they are carrying on their book to access cash in order to pay salaries, to pay utilities, to pay any bill that will come up from time to time until the receivables are paid.
Yeah. So the receivables are basically the money that you have on paper. It's just not in your bank account
It's just not in your bank account, because what happens and that what creates receivables is that all companies will sell some of their sales will be in the form of credit sales. And then persons will decide, you have agreed with people to pay you 30 days or 60 days down the road. But what may happen is that they don't pay you. So the receivables is really that part of the business that you have actually done on a credit basis.
You've already provided these goods, so you know that the funds are owed. You're going to get the
them.
funds. So how do I go about accessing the receivables financing from Exim Bank?
Well, what you'll do is that you will come to Exim Bank to let us look at the name of those persons who are owing cash to the business. And based on the names that are there, then Exim Bank would be inclined to look at providing you with some with cash flow or a loan up to 30 days, 60 days.
This isn't really for small businesses then, because small businesses might not have these type of contracts.
Let us say John Brown owes the business $50, but John Brown is not a person that the bank may be interested to carry receivables for it, because he's not sure that John Brown is going to be paid. So it is usually for blue chip companies that are the government entities that we would want to carry. We will leverage those receivables for.
Oh, so it's not everybody that owes you.
Everybody.
Not all your receivables can get receivables financing.
We would accept and provide you with cash for it.
Okay, but like the government, you already know. You know the government is going to pay.
Entities,
you know they're going to pay.
Yes.
Just that you might not know when you're going to get the money, but you know it's coming.
Yes, and so in that instance, it's a better risk for the bank.
Okay.
So basically that is it. So is that when you ask, I need to be kind of, don't create a false impression that everybody would basically qualify. Let us say for the hotel sector, a lot of small suppliers trade with the hotel sector and particular hotels who are usually good risk. It's just that they may take 45 days or 60 days to pay you, and you would want, for those small suppliers, if they are able to access those cash early, they can actually do more business, because you could approach somebody else you buy products and sell to somebody else and create more receivables. So that is the whole concept. By actually getting the cash, being able to go back, buy more products and sell it to somebody else and create another round of receivables.
When the company pays now, are they going to pay Exim instead of paying me?
The ideal solution to that is Exim would prefer to be the one who collect the money, who the money is paid directly to. Because in that case, the bank is more protected under that scenario. In some instances, what we do in terms of we actually ask that the receivables are assigned to the bank. And so the third party would now pay directly to the bank.
This is a loan.
It is a loan. It is a
there
loan.
is
So the person,
costs
so there's an
associated.
interest cost associated with this loan. But the good thing about it is that, let us say the receivables is for 60 days. So, and the interest rate on the loan is for 12%, just for ease. So 60 days is technically 2 months. So you would only pay 2% of the cost of what you borrowed. So the cost to you is only 2% and not 12%, because the 12% would be the annual rate, while for the period that the loan is out is only 2 months.
So it's split over the 6 months.
Yes, over that 2 month period.
Over that period.
Yes.
Okay.
So it is divided by, so it is the 12 divided by 2 by 6.
So it's much more affordable than if you were to approach a commercial entity.
Then if you possibly should take out
a loan with a commercial bank.
So it is always incumbent, if you want to save on interest costs, that you encourage the person whose receivable you're carrying to pay the bank. So if you even got the loan for a 90-day period, you should encourage them to pay in 30 days, because it means that you will only pay 1% instead of paying 3% if the receivables was outstanding for the entire 90 days.
Thank you for joining us, Alan. Lots of good information there. That's it for this episode of Money Moves, brought to you in partnership with Exim Bank's Business Advisory Service. Check out their website, eximbankja.com. I'm Kalila Reynolds. See you next week.